And as I said, to get more return on your fixed interest, you need to move up the risk curve. And this is usually called credit. There's not a lot of science where bonds stop and credit begins. There is a bit of a trend right now for what's called private credit, which is unlisted loans, often to poorer quality counterparts, which we don't think has a place in retail investor portfolios. But you're certainly seeing a lot of noise from issuers like Metrics. And it's certainly a way to get higher yield until it's not. And we haven't really been through a stress test to really check this out. Anyone with a memory long enough to remember the 80s junk bond boom, I'm not suggesting private credit is in the junk bond or leveraged buyout territory, but it's very opaque and it's hard to get a handle on. So moving up to credit, the big one here is CRED, CRED. That's the beta shares investment grade corporate bonds. So that will include bonds that are issued by corporates with investment grade, which means they're rated BBB plus or better. So you'll find Qantas in there, you'll find BHP, you'll find the banks. Then there's the iShares corporate bond index. They're moving down or up the risk curve. VanEck Vector's subdebt. So subdebt is debt that doesn't have as good a security over the issuer as the more senior bonds. And this is moving into really hairy territory. This is where active management really does add some value. Hybrid HBRD, managed by one of the top managers in the country, Christopher Joy, runs a business sort of B. Sorry, I was having a mental blank about what it's called. But if I was investing in bank hybrids, that's how I would do it. We don't have these in our portfolios, but certainly if you were running a retiree portfolio, that's something you might want to have a look at. The recent developments over the last week or two suggest that the bank hybrid market, at least in the retail market, might be over. The RBA is not happy, and so watch this space on that one. I'm sure there will be an alternative, and but for now, HBRD will be my pick in that space. But that's probably not for most people listening to this session.